In a financial landscape marked by uncertainty, are you prepared for the potential market upheaval ahead?
Join leading market analysts like Emily Brown, Ray Dalio, and Danny Moses as they reveal insights into the turbulence brewing in the economy.
Our state-of-the-art AI summaries condense invaluable analyses into digestible insights, saving you hours of research.
Buckle up! Emily starts by exploring the impact of interest rates on market valuations.
And stay tuned. Ray Dalio will share strategies on how to navigate a financial reset like a pro.
Plus, Danny Moses provides alarming insights about current market conditions and what lies ahead.
Today, we are discussing the economic landscape and the potential challenges equity markets may face in 2026.
Emily discusses how ongoing economic shifts might impact various sectors.
Emily Brown suggests that many market indices could be overvalued and may lead to corrections.
This aligns with David Lin's observations about rising interest rates affecting investments.
What is Emily's perspective on interest rates impacting stock valuation?
Emily states that high interest rates exert pressure on overvalued equity stocks.
Emily Brown mentions expected volatility in tech and growth sectors.
David adds the importance of diversification in today's market.
How does Emily evaluate the prevailing investor sentiment?
Emily notes a significant shift in investment strategies due to economic uncertainties.
What predictions does Emily Brown have for equity markets this year?
Emily foresees a market correction of 15 to 20%, advising careful positioning.
Emily recommends that investors pay close attention to interest rate fluctuations.
Additionally, choosing sectors with strong fundamentals offers a safeguard against expected corrections.
Today, we're discussing Ray Dalio's insights on the current financial reset.
Dalio emphasizes the vital issues raised by rising debt and inflation, advising viewers to rethink their financial plans.
Dalio identifies the growing debt as a critical threat to our economy's health.
He highlights that inflation is continuously diminishing purchasing power, influencing everyday consumers.
Dalio indicates that the ongoing financial reset represents a real challenge for both investors and consumers.
He argues that adjusting to these dynamics is crucial for financial resilience.
Dalio advises diversifying portfolios to navigate potential economic risks caused by shifts.
He recommends that investors consider inflation-protected assets to preserve value.
Dalio anticipates market fluctuations as they reflect the changing economic environment.
He notes that investing long-term in robust sectors might yield advantageous outcomes.
Dalio concludes that families must reassess their financial plans to prepare effectively for upcoming challenges.
Investors are advised to stay informed about significant economic signals to inform their strategies moving forward.
Today, we delve into insights shared by Emily Brown regarding the potential challenges equity markets face as we move into 2025.
Emily highlights significant risks, including rising interest rates and geopolitical tensions that might trigger further market corrections.
Emily Brown forecasts that equity indices may face corrections of 15 to 25% in the coming year.
David Lin notes that this outlook aligns with observed patterns of increasing market volatility.
Emily discusses how the ongoing rise in interest rates poses risks to equity markets.
Higher rates lead to increased borrowing costs, affecting consumer spending and overall investment.
Emily mentions that geopolitical tensions contribute to market unpredictability.
In response, David reinforces how these tensions create knee-jerk reactions in the equities market.
How does Emily Brown characterize the current investor sentiment?
Emily notes a shift towards cash and bonds as investors seek safety amidst uncertainty.
What can we expect for market volatility as we move through the year?
Emily predicts that volatility will persist, with markets potentially declining another 15 to 25%.
In conclusion, Emily suggests that investors keep a close eye on interest rate developments.
Additionally, she recommends diversifying into safer investments to mitigate risks during turbulent times.
Welcome. Today, we're analyzing the recent GDP and PCE inflation data with insights from guest analyst Paul Smith.
Paul offers a detailed look at how these economic indicators shape market expectations and investment strategies.
David Lin emphasizes that understanding GDP growth rates is vital for assessing economic stability.
According to Paul Smith, PCE inflation data significantly impacts consumer behavior and spending. Paul Smith notes that the latest GDP figures suggest a recovering economy, but inflation remains a challenge.
Indeed, David Lynn adds that understanding these factors is key for investors navigating the current market landscape.
Based on the latest data, Paul predicts we may witness heightened volatility as markets react to new information.
David Lynn advises investors to stay nimble and adapt their strategies based on ongoing inflationary trends. David and Paul both agree that persistent high inflation could lead to market corrections soon.
Nevertheless, Paul highlights that certain sectors could present unique opportunities in the face of inflation.
To conclude, keeping abreast of GDP and PCE data is essential for making informed investment choices.
Paul recommends that investors consider diversification as a strategy against predicted market fluctuations.
Join us as we unpack urgent market warnings from investor Danny Moses.
Danny expresses grave concerns about the volatile market, stating we might be playing with fire.
Danny Moses discusses critical threats in equity markets, suggesting a downturn could be on the horizon.
He notes that inflated valuations in several sectors might incite sudden corrections. Danny warns that current equity valuations might not be sustainable, anticipating corrections.
He clarifies that factors like inflation and political tensions contribute to market fluctuations. Danny suggests that rising interest rates can diminish consumer purchasing power.
He warns that as borrowing costs rise, businesses might struggle to achieve their growth goals.
What forecasts does Danny Moses have for the market in the next year?
Danny anticipates that there might be a correction soon, advising investors to prepare for persistent market volatility.
Danny recommends that investors adopt defensive strategies in these unpredictable times.
He stresses the importance of closely following economic metrics for smart investment choices.
Welcome to Eurodollar University. Today we discuss the implications of a major credit fund collapse with analysis from our guest, Emily Brown.
Emily will provide insights into the consequences for the financial markets.
Emily Brown points out that the failure of this credit fund is a symptom of larger market issues.
She stresses the need for investors to remain alert given the changing market dynamics.
Emily discusses how the rise in interest rates is complicating the situation for credit funds.
This tension is critical as it influences both credit availability and investor behavior.
Emily observes a cautious shift in investor sentiment due to rising uncertainties.
This indicates a heightened awareness among investors about potential market pitfalls.
Emily advises that diversification is key in managing risk.
Investing in more stable assets could be crucial to navigate these turbulent times.
What are the predictions for the stability of credit markets?
Emily suggests that without significant changes, further declines are likely.
Emily concludes that investors need to be proactive in reassessing their strategies.
David Lynn urges viewers to keep an eye on market conditions to effectively manage uncertainty.
Wow, what a deep dive into the financial challenges we face today.
Absolutely. Each guest, from Emily Brown to Ray Dalio, has given us a lot to consider about our financial future.
It's striking how they all agree on the risks in today's market, emphasizing the importance of being informed.
Right. But let's not forget the varying opinions, like how Emily views the risks, while Danny thinks we're really playing with fire.
And then we have Paul and Ray, both focusing on data, but with such different concerns. Paul on trends and Ray on immediate changes.
Those differences remind us that in finance, perspectives vary widely, and that's what makes these discussions vital.
If you've enjoyed these insights and want more, make sure to like this video and subscribe.
Your engagement helps us keep bringing in the best experts to inform your financial decisions.
And don't miss our next video. We'll explore global trade dynamics and their impacts on inflation.
Thanks for watching. Remember, staying informed is your best investment.